So you go through a thorough due diligence process. So what type of due diligence would you recommend for investors? I'm an investor, I'm very naive, I don't know anything about all these things. What do you recommend them to do?
Therein lies the biggest challenge in the industry.
Yes, it does.
Without question. We think that there's somewhere between 7,000 and 8,000 different hedge funds out there. And the problem here is
7,000 to 8,000 hedge funds?
When you include hedge fund of funds, yeah, it's that high. And the problem here is that there is, again, it's a lightly regulated or unregulated industry, and therefore there's no standardization of how information is provided through the industry. So when you approach a manager to do due diligence, you're starting from scratch. And you can ask for whatever information, and they can provide whatever information they choose to. There's no standardization. And therefore, the work in doing due diligence on, say, a hedge fund is significantly greater than the work of doing due diligence on, say, a mutual fund that's regulated, and there's certain things that you can count on right up front. So when we do due diligence, again, what we would recommend, the first thing is make sure that that independence exists. Make sure that there's service providers that are wrapped around your hedge fund investment that are independent from the manager themselves, custodian, fund administrator, and an auditor. If those things are in place, you're in good shape to start with. But that's only a starting point. From there, you then have to dig into the manager themselves, their background, their staff, their firm, how long it's been in existence, their investment strategy, their performance, their returns, and where their risks are. So there's a lot of things to do there, which most individuals don't have the resources to do, either the time or the expertise. So for most individuals who are looking to invest in hedge funds, I highly recommend finding some advisor, a consultant or advisor that can help you with the due diligence process. It's a fairly complicated and lengthy process.
Fairly complicated and lengthy process. What trends do you see going forward in the hedge funds and alternative investment industry?
Well, again, when we talk about trends, I always think about two things, regulatory administration and the investment. Let me start with the first, which is the regulatory side. I do think that we're going to see some regulation that's going to require every hedge fund management firm, the advisor themselves, to register with the Securities Exchange Commission if they're above a certain size, and I think that's a good thing.
And I think it's a great thing.
And that gives the SEC the authority to come in and monitor that manager. So I think that's a good thing. I think we may also see some regulation around either requiring some independence in the service providers around a manager and or requiring managers to submit to surprise audit from time to time. Also good things. Now, what I hope we don't see is regulation that goes into controlling how the manager does their investments. Okay, really what we're talking about more are the structures of the manager and what controls are in place. If the regulation stays a little bit away from how managers go about doing their investments, I think that's a good thing. Managers should be free to put together different investment schemes and approaches that make sense in the marketplace as long as the administration of their fund is nice and tight. So that's the regulatory side.
So it sounds like you do buy the concept of subscribe to the notion what Congress is trying to do to regulate the hedge funds.
I subscribe to certain types of regulation.
Certain types,
yes, that will
you
benefit,
qualify by.
Yeah, that will benefit investors with knowledge and control over the manager, that will benefit our overall marketplace by providing information to regulatory bodies that they can monitor systematic risk. That's good. And that don't take away too much from the hedge fund manager in putting too many burdens on them in managing their smaller firms.
Good point. Give them the freedom.
Yeah, so a balance.
Give them some oxygen to breathe.
Exactly.
They will do the wonders for you.
Or stated differently, let's regulate the big stuff. The stuff that's really going to make an impact and is important, and let's kind of wait and see on some of the smaller stuff.
So what about the trends on the investment front?
Well, the investment front, it's going to be interesting. We've seen some interesting marketplaces, something that many of us never would have anticipated seeing. 2008 was a tumultuous year. And certainly there's the pain that we've all felt in our investment portfolios. I tried to look for the silver lining, and the silver lining is sometimes these periods are good to shake things up a little bit. And certainly in the hedge fund industry, the managers that were marginal managers have probably been forced out of the industry at that point.
They're pretty much gone?
The ones that are marginal are pretty much gone. In fact, we think in the last 18 months, about 1,800 managers have shut down, but also in the same time, about 900 new managers have opened funds. So,
the same people who opened the fund?
Well, hopefully not. That happens on occasion.
Yes.
We think it's actually new managers seeing new ideas. Where are these new ideas coming from? Well, we had a huge dislocation of valuation in 2008 in the marketplace. People don't know what things are valued at. The marketplace is struggling to value financial services companies, technology companies. And when there's a dislocation of values out there, that's when hedge fund managers do their best, to find value anomalies in the marketplace and put investments on that will capitalize on those valuation anomalies. And we've certainly seen a lot of changes with the stimulus that's going on right now is going to have an impact on a lot of different industries and a lot of different businesses. And if you can get ahead of the curve and figure out which businesses are going to benefit from that, which businesses are going to be hurt from that, and you can put on an investment that will benefit in both contexts, that's a good thing. That's opportunities for hedge fund managers.
So for investors looking to invest in the alternative investment, which is what you've been advocating for a while, that's the business you're in, what do you recommend?
Well, there's a number of different alternative investment strategies, particularly hedge funds. There's
You talked about the hedge fund, yes. What's the hedge equity?
Hedged equity is long-short equity,
Okay.
which means that a manager, instead of just looking at IBM and Apple and saying IBM might be doing better than Apple, and therefore buying IBM stock on its own, like a mutual fund manager
Correct.
would, instead they buy some shares of IBM stock long, they benefit if IBM goes up, and they also buy some shares of Apple short, which means they benefit if Apple goes down. And in doing so, if the overall market moves up 5%, they'd make 5% on their IBM stock, they'd lose 5% on their Apple stock, so their portfolio would be neutral with the market going up and down. What they're looking for is IBM to go up and Apple to go down. They're looking for the change in relative value between two companies. That's a long-short hedged equity manager.
Wow.
So that's one strategy. There's three other primary strategies that involve macroeconomic trends called macro managers, following trends around the world, commodities, currencies, interest rates. A third would be event-driven managers following specific corporate events, such as a bankruptcy or a merger or acquisition. And the last one would be arbitrage managers, managers that are studying securities that have an ongoing relationship, and those two securities relationship may deviate from time to time. And then they invest based on that, anticipating that they'll come back into. So those are the four primary strategies.
What about the international firms? Our audience probably are international type of peoples, and they're very interested in. What's the trend these days for the international firm, especially for the emerging market? You talk about, BRAC, the Brazils and Russia, India, and China.
Well, there's certainly a lot of activity going on out there, and certainly the stimulus has changed a lot. One of the things that I look a lot to is there's a book written by New York Times columnist Thomas Friedman.
Yes.
Called, I don't know if you've had a chance to read it. Actually, two books. One was The World is Flat, and then his subsequent book was Flat, Hot, and Crowded.
Well, my wife is reading it right now, so I had a chance to glance at yeah.
Good. It's a fascinating book.
It is a fascinating book. Well, thank you very much, Dan, for coming to our show. I really appreciate that very much.
I appreciate it.
And that is our show. Thank you for watching. See you next time.